And welcome back to the Macro Gamer channel. My name is Mark Cassingham. Today we're going to go over week 12 of our weekly numbers. Today is October 12th, Saturday. We're going to go through last week's numbers. Let's get started. So our current portfolio net worth is $194.26 as of today, October 12th. So as you see on our pie chart, how our distributions are set up. We have our weekly data for week 12. We are up 0.18%. We have a market gain of 61 cents. We have zero dividend earned, and we had no net cash flow this week, so no deposit. You see that more on our monthly charts. So you see this U shape kind of happening. We had a bit of a change up, kind of hitting our portfolio. Bonds kind of flipped around on us. So we're going to move a little more money into commodities, and you'll see that on the next setup. Here's our monthly data. So this is from September 12th to October 12th. We're up. Our money weighted return is up 2.84%. The net cash flow on September 25th was this $30 spike right here. So remember, that's cash deposit coming into our account. That is not our performance. Our performance is the monthly weighted return down here at 2.84%. We had a market gain of $3.81 and a dividend of 22 cents. So just remember, whenever you see these large spikes, about every third week we have a $30 deposit. So we auto deposit, or we dollar cost average $10 every week. And the way the portfolio is set up is once we exceed $25 in the cash account, it'll automatically deposit into our portfolio and it'll distribute it based on our percentages. So every third week, so that's what we see on September 25th. And then likely next week or the following week, you'll see that again. So these are our portfolio weekly percentages. I did change two of our allocations. So government bonds, which is our second line item here. It was originally 30%. I reduced it down to 25%. Bonds took a reversal on us, so they were going up real good. And then jobs data came out higher than expected. And inflation data came out kind of muted, not too big of a change, but mostly it was the job numbers that made bonds drop. So what I did is I took that 5% out of bonds, reduced it to 25%, and I increased our commodities position by 5%. And I was talking about the other week how much commodities have gone up. Now, there was a sharp pullback on commodities, so of course I timed that horribly. But I still do think commodities are coming up. I think inflation's slightly creeping up. So I reduced 5% from government bonds to 5% for commodities. So just a heads up on that. So let's go over these numbers. So gold still at our large allocation, 30%. Still having a phenomenal year, up 0.19% or for 11 cents. Bonds, as I said, reduced down to 25% now. Positions down 0.5%, 0.57% for a loss of 29 cents. Commodities position now at 15% is up 0.63% or 17 cents. Our US dollar still at 15%, which also had a good week, up 0.48% or 14 cents. Our stocks, which continue to have a great year, but I continued to not put more money into it at my own fault, at 10%. It is up 0.61% or a market gain of 12 cents. And Bitcoin, still at a 5% position. It's been in a downtrend since March, has not broken that downtrend yet. It is up for the week 1.14% or 1.14% or a market gain of 10 cents. So those are our weekly numbers. And if we get to our monthly, gold, of course, because it's having a great year, up 5.16% or a market gain of $2.73. Bonds, like I said, having that reversal down a staggering 2.30% for a market loss of $1.22. So that was a bit of a hit to me, unfortunately. But like I said, bonds hit a hard reversal on that jobs number. We've had job revisions several times, like a dozen times, I think, at this point, for all these numbers. So it's likely those numbers might get revised too, but it's going to happen weeks or months later, unfortunately. So I still took that hit from that surprise number. Commodities up 7.54% for a market gain of $1.46. This is why I'm putting more money into commodities, because it's more than gold in 1 month. You know, it's up 7%, over 7%. So I'm slowly going to see about putting more into commodities. Commodities are more volatile, so I won't go all in right away, but there's definitely been an uptrend in commodities. So I'm trying to reverse my portfolio a little bit, come out of bonds and put it into commodities. US dollar up 2.02%, or for a market gain of 55 cents. So the dollar, in this turnaround of the bonds coming down, the dollar has gone up. So it's the reason why we hedge with different asset classes. So even though I lost some in bonds, I gained some back in dollars. So like kind of a way to save myself a little bit. Stocks up 4.35% for a market gain of 77 cents. You know, I might reduce bonds to 20% and increase my stocks to 5%. Just bite the fucking bullet on stocks and just admit I was wrong for this whole fucking year, basically, and just increase at least to 15%, just because just being stupid and stubborn about it. It's my own bias. It's nothing to do with the charts, because the charts show stocks and gold both having a phenomenal year, but I've just been less biased. I've been more biased against stocks, just because the overall economy to me doesn't look very strong. But the stock market does not seem to give, or the S&P 500 does not seem to give a fuck. Bitcoin up 9.59% for market gain of 78 cents. Keep in mind, like I said, it's been a downtrend since March. So there's had these ups and downs, but it's overall been a downtrend since March. So something to bear in mind. So this is my transaction. So this is where I sold primarily my government bonds right here. Sold about $9.15. Also had a little bit of a gain for stocks and dollars. So when I rebalanced it, also sold, you know, about $1 worth together, you know, this. And then I bought commodities with it for $9.27. So the two that, and it says 2 excluded. Anything that's less than $1, it doesn't usually always add it up here because it's so small. But I primarily sold 5% of my position in bonds and moved that 5% position into commodities. So that's primarily what you're seeing here. So I was at 30%, reduced it to 25. Depending how the numbers go, I might reduce it to another 25, because, you know, doesn't mean I was wrong in the long term. I was right in the short term, and then a flip happened hard when jobs numbers came out. And now people are like reversing their position on it. So I might have to as well. We'll see. But for right now, I took out 5% of bonds and put 5% into commodities. So now we get to our Illuvium staking. So current price as of today is $37.78. We still have our 3.12 ILV for a market value of $117.89. I've had 2 revenue distribution payments so far. So I got 0.012 ILV, which is 46 cents in revenue payments. And our revenue distribution currently is 0. Have not received a third yet. Like I said, this might be and it's not fixed, because it's whenever they reach 150 Ethereum worth of value in the pool, then they distribute the revenue distribution. So that could be once a month, once every 2 months, once every 3 months. It could get so crazy, it could be every week. You know, it depends how much money they make. You know, just it all depends. I've only had 2 payments so far, so right now we haven't had a third one yet. So just the 2 together equal 0.012 ILV. I think in total the first one was 0.003, and the other one was 0.006 or something. I don't remember exactly. That's where we're at. So we have our Illuvium vesting. Illuvium vesting. So we have our 3 vesting. Remember, the first one was about $100 at the time, which was July 27th I purchased. And this one was 0.79 ILV for $40 at the time, which was August 24th. And this was 1.01 ILV I purchased for $40 at the time, which was September 25th. So you see, as the line gets further and further across, it gets closer and closer to unlocking. So remember, what's locked up I can't pull out until it's unlocked, but the revenue payments, I can actually take those out whenever I want. But my goal is to once a month add about $40, lock it up, and then just increase my revenue distribution that way. And then, of course, as I said, our revenue distribution is 0 right now. We have no new payments. We just had 2 so far since July when we started this. So hopefully we get another one maybe next month. We'll see. But we've at least had 2 payments so far. So this is our ROI in terms of passive revenue. So our portfolio you know, here, this is a little more active. So I move these numbers around. It happens, you know, once a month, you know, not very often, maybe once every 2 months. But it's more active where I'm moving the money around. Where here, it's just, I'm just simply buying the token and locking it up. And I get a payment, you know, however often they exceed the amount, which is that 150 Ethereum worth in their pool, which they distribute out. So this is more passive. These are both my ROI. When I play the Illuvium game and I'm trying to collect assets, that's my ROG, so return on gaming. This is return on investment. Return on gaming is actually playing the game for your time to try to earn a revenue by selling the assets. And we have no Illuvium transactions. So those are our weekly numbers. So now we get into our charts. So we have our GLD, as always, strong year. Can't say this enough. We'll do the year to date. So this is year to date. Just doing phenomenal. This is a 1 year chart from October to October. There's no reason, I keep saying this every week, there's no reason to sell gold. There's no trend break here. There's nothing wrong with this. You know, this is why we've had it at 30%. In my personal portfolio, I've had it at 30% probably since January, February. I don't remember exactly when I made that flip, but you know, going strong. Just a phenomenal chart. There's no reason not to own gold. Maybe I could compare it to the S&P to see if it's still outperforming or not. See, same scale. Yeah, so over 1 year, let's do year to date. So year to date, gold is up 28%, or I should say our GLD ETF, which follows the price of gold, is up 28%. And or I should say the S&P 500 ETF is up 21%. So there's been pretty consistently these past few weeks about a 7% gain that gold has over the stock market. Both are up for the year. You can see them clearly. Both doing good. You know, stock's more volatile here, more choppy. But gold has been outperforming. Gold has been strong all year. There's no reason not to have gold at our max position, which is at about 30%. I said before, I could really top out at 35%. I don't want to. I want 30% to kind of be the upper ceiling of each asset class. So gold, bonds, commodities, doesn't matter. Like 30% is the upper ceiling and 5% is the bottom floor. Like I don't want to go below 5% because I have to have a position in my asset. And Bitcoin's really volatile, so that's why I put it at 5. If it was less volatile, I might put it at 10, like stocks, but it's more volatile, so I put it at 5. Plus it's been in a downtrend since March, so I keep it at 5 until we see a reversal of some kind. So that is our gold. Now you see here is what I'm talking about. So remember, we came into this wedge pattern. Around here, I really increased my position to bonds because I was like, based on what I was seeing it's going to be a breakout, and there was. But then look what happened. Just pretty much gave all that back. Pretty much just lost what I put into it, which is unfortunate. But we're still looking at this green trend line. So the red trend line was bearish, the green trend line was bullish. You know, it still came to that wedge and it followed the green because it broke out. But I don't know if it's going to hit this and pop or if it's going to just crash right through this. We're going to see. But like I said, I've already kind of went ahead and reduced my bond position by 5%, increased my commodity position by 5% because this was such a big turnaround. And again, the job numbers that came out, I think it was overshot by like 100,000 jobs, non-farm payroll jobs. So it was a huge number. Like if we look at that, I keep saying I might as well just look at it. Where are we at? Right here. So zoom in. So we had these numbers come. Where's that? At 254. Yeah, there we go. So I kind of put this super long red arrow. Jesus Christ. Let's give me a second to fix this. Doing this live. There we go. So it kind of hit the bottom of the pandemic, you know, off that 2021 came up, and then we've had this normal downtrend coming down. So I put this red arrow. But this right here, the previous number, you know, just around 100,000, and then it popped to 254,000. This is why my bonds went down. This fucking number right here. This is why my bonds went down, and then my dollar went up. You know, so I wasn't expecting this big pop. It's still in this overall downtrend, right? It's still like, this is non-farm payrolls. This is still jobs created. This is still going down. Like overall, this is still going down. The trend's going down, right? But like, it was just a big pop. You know, it's kind of surprising. And one could speculate, you know, it's October, the elections, you know, coming up next month. You know, one could speculate that the numbers are a little funny. Because like I said, all these numbers got revised back here. You see all these numbers? They were higher and then they got revised down. Like 10 times or some shit, like a bunch of times. So there's something to be said that this could get revised down as well. But in the moment, in the market, because the market's live, you know, it popped on last week and then just my bonds took a hit. It's very frustrating. But it is what it is, you know? So that number came down. So I figured, all right, I need to reduce the bonds because I can't keep having this go down. And you look on a 5-year, you know, bonds have just been coming down, 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 down. I'm hoping that, again, this is the reversal and bonds are going to make a comeback and I can get in early to it. As of right now, I don't know. I'm still along this green trend right here. So we're going to see what happens. Let's move on to the next one. Look at my dollar. So same thing, came into that wedge pattern. And then it broke down right here. So this is the bullish pattern, the green line. This is the bearish pattern, the red line. So it broke down and it held with the bearish pattern. But look what happened because of the jobs. Now the dollar's popping back up. So the dollar's already 15% in my portfolio. So I don't plan on increasing that. I definitely don't want to decrease it because look at this. Look at this fucking turnaround. This helped me take less of a hit when my bonds came down. You know, like this kind of helped me out a little bit because it came up. So this was, you know, I'm going to keep my dollar position at 15%. You know, they're looking at the jobs market like it's strong, like air quotes, like it's strong market. I'm not so optimistic. I just showed you the fucking downtrend, you know, in that. Not to mention, you know what, why don't we just get into it? If you look at continuing claims, unemployment claims, look at this trend going up. Why my arrow's so fucking long? I thought I made these shorter. So people can see. There we go. So this goes back to, again, June 2022. We hit this bottom and then we're coming up. So this is continuing unemployment claims. I don't like, I shouldn't say I don't like, I don't prefer initial claims because that's just the initial claim. That's the first one. That's all they count. So everyone's initial claim, you know, you did it once, boom, you're in the claim. Yeah, it shows the chart going up. This is continued claim. So this is people every single week getting a paycheck from the government, unemployment claim, and it just continues to go up. So we have our new jobs creations going down on here. This is new jobs being created going down, and we have our unemployment claims going up. All right, so like I said, this is why I'm not bullish on the market. You know, these are just two indicators, but I'm like two kind of big indicators to watch. So that's why, like, you know, I'm going to keep dollar at 15%, but I'm going to keep my bonds higher too, because I just don't know what's going to happen. So I'm just trying to diversify, trying to be careful. So now we get to commodities. So this ETF overall is pretty fucking good. I love this ETF. This is a semi-equal weight USCI ETF for commodities. It's been in this pretty good uptrend since July 22, and it's been coming up. So this is like this strong uptrend right here. So there was this, I was highlighting the other week, commodities really roaring upwards, kind of like back here from March 24 to April 24, like a good month long run. Now we were kind of seeing the same movement, but then right here it came back and pulled back. This is about where I got in, unfortunately. Do like a monthly. So this is kind of where it came back and then pulled back up. So I still think commodities are going to be strong, and I do think inflation is creeping back. So that's why that's why I have increased my position by commodities by 5%. So we're at 15% now. But this has been a pretty long, you know, uptrend for commodities for this ETF. So it's been pretty strong. And then if you go back here, it's really been strong. It's going back. I put like an arrow on that. Let's see where my arrow's at. I don't even know where the arrow's at on this right now. Just do a line, fuck it. We do a line like that. Look at that line. Just from all the way back there from May 2020 to where we're at now. Just strong commodities market. But right now we're just focused on what the trend is for the year. So it's doing pretty good. RSP are equal weight stocks. So this is what I'm talking about. So I have got to just acknowledge my own just failure in this. Like I could have had this at a higher percentage this whole year, because it's been doing good. This and gold have been doing good. Those would be the best two things to hold since basically January from this year. So if I look at year to date, these have been great to hold. But I look on a 5-year, you know, I had this peak back here in January 22, and it came down, and then just right around here in October, same time around gold, started going up. You know, it started going up, and I've held it at 10%. So still helps my portfolio being at 10%, but I should really have this higher. I should have been having it higher. And you know, as we get closer to the election, people speculate all kinds of things, like what's going to be happening, good, bad, everything. But I should have just been long it this whole time. You know, I might increase by 5%. Maybe like I said, I'll reduce my government bond by 5%, so bring it to 20%, and increase my stocks by 5%. But I don't know. I'm the type of person where I believe as soon as I do that, that's when the market's going to tank, which will be hilarious. But that'll just be my luck. But either way, stocks undeniably having a good year. Someone had a great let's see if I can find it. Someone had a great post on performance. This is just my X account for the Macro Gamer channel. If you guys wanted to follow it, it's macro_gamer_x. I'm probably not gonna be able to find it, but it was of all the years the S&P 500 has been going up. I should say of all the years that this has been recorded, like there's been like one really good year. This has been one really good year. Here we go, right here. So the rolling year-to-date performance of S&P 500 since 2000. So you see all the gray lines are all a different year between 2000 and 2024, and you see the blue line. Look in comparison, the blue line compared to all the gray lines. This is it's pretty crazy performance for the S&P 500. And like I said, I've only had it at 10%. You know, that's my folly. That's my problem. I should have clearly had it at more. Because you look at all these other years, like I don't know what year this one was, but Jesus Christ, it's like the worst year. Like this is like one of the fucking worst years. But like looking at it on the blue line, like this is arguably one of the best years. Like there's like a couple gray ones in here that are just slightly better, but I mean like this is pretty much the best year. If it continues, like let's say this gray line right here, you probably can't tell what my cursor is, but like basically if it just continues up like this, it's gonna have like one of the most phenomenal years in the S&P 500 history, at least going back to 2000. But like it's been a crazy year, you know. So I haven't missed it because I've had 10% position in my stocks, but like I could have had higher. You know, I could have had 15 or 20%, and my portfolio could be doing a lot better. Unfortunately, still doing good, right? Not gonna lie, still doing good. But like I could have done better, so I may have to submit to my own ego and just say to myself, I'm like, I need to fucking just do this. I need to like increase to 5% because you know I was wrong. So long story short, I was wrong. Something I was right on is Bitcoin having it at 5%. So it's just been in this downtrend since March. So here we are, March 24. It's like 13th of March. Hit a peak and it's been coming down. So it's been chopping up and down right here at this mark. I mean at this line. But I mean it hasn't really shown a reversal in trend yet. So you know it peaked here in June. It peaked here in July. You know, it peaked here just last month, September, and it's trying. Maybe it will. Maybe this time's different. You know, everybody loves saying that. Maybe this time is different. But so far, you know, it's been trending down. So that's why I've been having it at 5%. If it has a reversal and it's in line with the stock market being strong, I might increase my percentage to that. But Bitcoin's very volatile. You know, you run the risk of, especially because it trades over the weekend. So you run the risk of like a crash over the weekend, and you can't get out of your trade because I'm buying an ETF IBIT, which is Monday through Friday. You know, I can trade it only during market hours. So like once that market opens up, like it's gonna hit. So there's nothing I can do to get out of it. But that's why I keep it at 5% because I'm not seeing a trend reversal. For me, a trend reversal would be getting close to its all-time previous highs and then going through it and going up. Like I would want to see that. So not just getting above this red line, but getting up to the previous all-time high and then fucking going up. Like that would be like a trend reversal for me. That might interest me. But as of right now, those are numbers. Like I said, I changed my government bond position down 5%, so decreased from 30% down to 25%, and I've increased my commodities position from 10% to 15%. I do think inflation's creeping back a little bit, and irregardless of which political team you're on, team red or team blue, I don't care. Both candidates seem like they want to just spend a lot of money and print a lot of money, which I think is just going to cause more inflation. So I do think commodities, possibly going into the end of the year, is still going to be a good trade overall. Could be wrong on that. You know, it's been good since pretty much the pandemic started. So going on like 3-4 years. But I think it's just going to continue because they just want to spend a lot of money, and that's going to cause inflation. So I'm going to own commodities. So I'm going to own the inflation as it goes up. So my asset in my portfolio is going to go up. Pardon me. So, you know, if it's all going up, why not add it to your portfolio and make money off of it? That's how I look at it. But as for that, that's week 12. So hope you enjoyed it. If you have any questions, comments, or criticisms, as always, let me know. And I'll see you next week.